So we're now moving over to Germany, where a company called TeraHash, about 3 or 4 years ago now, started experimenting with Bitcoin miner heat in their factories. And we have Charlie himself to deliver a talk today about how Bitcoin mining is not just for heat, but it's also for grid stability. So we're going to take a coffee break shortly after that. But until that time, Charlie, the floor is yours. Please put your hands together and welcome Charlie to the stage.
All right. Hello, everybody. Super excited to be here on stage. Thank you, first of all, a lot for the team of the Free Madeira for organizing this amazing event. And thank you all for coming here. Today, I will be talking about the balancing Germany's grid. Basically, how Bitcoin mining unlocks revenue streams that AI data centers leave on the table. So first off, a couple of words about me. I'm Charlie. I've been working for TeraHash since October last year, and I'm the lead of product management and customer success. Basically, like a little bit of a technical person here. I'm managing our sites in Finland, for example, also being like the first person when it comes to our investors who they want to speak to if something is not, or if they have any wishes for our Finnish sites. And also kind of like implementing processes into TeraHash now. We're a startup. It's a bit chaotic sometimes, so it's also always good to have like a clear line sometimes. And also for us, the AI topic is super important. That's why we're kind of also focusing right now a little bit on this. But yeah, what are actually the differences about Bitcoin mining and AI? I will be coming to this later on. But first of all, just a few words about TeraHash. So who's exactly TeraHash and what we're doing? So we as TeraHash, we see ourselves kind of like a Bitcoin hope company. So for us, it's super important to bring Bitcoin to the people, teach them about it, but also like showing them how Bitcoin actually works. And yeah, we have like different services. As you can see here, we do like service and engineering services. Basically, if we have a guy coming who's like got a solar farm or like wind farm, and they want to, or they have the question of whether Bitcoin mining can be profitable for them, we do like feasibility studies, but we also do like planning of like data centers, Bitcoin mining, designing data centers, and really trying to procure the sites, construct the data centers, and see where is the best location for it. Also, as I've come to my talk later on, we have 2 managed mining sites in Finland. They are right now also running, and it's pretty cool to see them like integrated into like the Finnish grid as well. And super important for us is also like to educate on Bitcoin mining, to show the people really how Bitcoin works, how they maybe can implement it in their company, and to really get the knowledge up there. So we have like different training courses for really like the decision makers into the companies, about like Bitcoin mining as an energy asset and also like a financial part. And what is also super important for us, we in TeraHash, we show, like we have guided energy lab tours where we show the visitors how it actually works, how it's been implemented in TeraHash in like the ecosystem of the Kläger Group, and how we use this excess heat from the Bitcoin miners actually in like an industrial field. All right. So I will be talking about the German electricity grid. And there are a few things which are really going wrong here. The German consumers spend 5.2 billion euros in total system services. That's what they have in cost of 2024. Like, it's insane. Everybody pays this. We have like 30.3 terawatt hours of redispatched volume in 2024 and 9.4 terawatt hours of renewable energy, which has been curtailed also. And Germany, as you said, Rachel, we are wanting to go like into renewable energies more. Germany currently has 54%, and we're trying to ramp up this number by 2030 to 80%. So we want to have really a renewable energy share of 80%, which is crazy to me. And I don't think that we will reach this target, because you need to imagine, like, with renewable energies, there comes way more flexibility to the grid. And that is why our TSOs and DSOs, they are not really prepared for this flexibility. They don't even have the right capacity for it. And that is why they are now thinking, oh, shit, we need to invest really into our grid, into the grid capacity. That's why they have huge investments coming, 16.5 billion in 2024. And our distribution system operators, they need to invest 110, and also like by 2045, 207 billion euros to the electricity grid. So these are huge numbers, and right now we have a really big spread. Basically, we generate more than we can actually lead through the grid and consume. So what they are doing, yeah, Germany pays billions to not use the energy it generates.
Do you just want to let everyone know what total system services means, what that volume means as well, because those are really important concepts.
So yeah, like the total system services are basically the costs for operating the electricity grid, being like dispatchment, like turning the machines up and down, and also curtailing the grid, and also like a few other factors coming into this place. Yeah, that's also like the stabilization. The what?
The second column there, dispatch volume. The dispatched volume.
The dispatched volume. Yeah, there's like basically redispatchment means that you are kind of turning the generators down. Basically, you don't have, you're taking load off the grid, and that's basically just like you turn off your wind farm, for example. All right, so now everybody is looking also into AI data centers. There are huge investments from those hyperscaling companies like AWS, Google, Deutsche Telekom also. They are just like going all into AI. And this is a huge part also in the German grid. Like a huge load will come here from just only AI data centers. And I just want to make a little bit of a comparison here where the main like differences between AI data centers and Bitcoin minings are. And yeah, if like maybe AI data center are the future or not, I don't know. So basically AI data centers are stateful, whereas like Bitcoin mining is stateless. What does it exactly mean? Just imagine like you have your AI data center running, it's running a task, a workload, and you just shut it down. Basically, all this work happened there is being gone. It needs to be redone until like the last checkpoint that you saved. So that is really not good because there are like high costs involved into this. Whereas in Bitcoin mining, it's really stateless. Just imagine like the Bitcoin miner is a dumb machine, as Joe mentioned before. So it's doing like trillions of hashes every second. So it doesn't really care if it's been shut down or not. There's no state which is lost. Also, AI data centers are SLA bound. SLA stands for service level agreements. Basically, you are the operator and you have like service level with the consumer basically, that you have like a certain uptime, for example. It's usually like 99.99%. That is the SLA. Yeah, ensures that it is running. Whereas in Bitcoin mining, the only customer is the Bitcoin network, and the Bitcoin network doesn't care if you have your operation running or not. Yeah, also a really important part is the capex costs. For AI mining, for AI data centers, it can cost up to like 20, 30 millions of dollars per every megawatt. Whereas in Bitcoin mining, it's usually like around $1 to $1.5 million. Which you have in capex. That's also why you just want to have your AI data center all the time running to have like a quicker amortization. And also like super important, like the latency of the internet connection for AI data centers is like just 1 to 3 milliseconds. And you need also to have like redundant fiberglass lines, whereas in Bitcoin mining, yeah, it's easy. You just have your Starlink satellite set up. It just needs a really, really basic internet connection so you can have it running into the desert everywhere you want. So super easy here, whereas for data centers, AI data centers, it really matters where your location is set up. All right, I will be talking a bit about the mining rewards and also like the different revenue layers which are open up here. So basically the base layer is obviously Bitcoin mining. So this is also like your main revenue that you will have. And we are talking here about like 800 to 900,000 euros which you have in revenue per megawatt per year. This is with like the latest machines like the Wattsminer M73. And those are like state of the art and a calculated Bitcoin price of 70,000. Obviously, this changes every minute. It can go up, can go down. We never know. That's why, yeah, it's really like an unstable revenue here. But yeah, that's also why it's maybe good to do like DCAing, selling it once at a time, and to not really have those big price fluctuations, for example. So really here, the revenue is dependent, first off, on the Bitcoin price, the network difficulty, basically how many machines, how many hash rate is in the actual Bitcoin network, but also the revenue or like the profit margin is also dependent on the ASIC efficiency, basically how efficient my Bitcoin miner is, and also about the electricity cost. Like this is a main factor. You can say like, if you are just solely running on Bitcoin, you need probably an electricity cost of below 5 cents per kilowatt hour to be really profitable here. So now we come to the second layer, which are the balancing markets. I don't know how you guys are into this topic, balancing markets, but for me it's also like super interesting. You know, in Europe, we have like a frequency of 50 hertz, which is like basically the heartbeat of the energy grid. So just have like your heart beating 50 times per second. That's basically a little bit how the energy grid works here. And you want to keep this at 50 hertz. You don't want any major differences here. Otherwise, you would have a blackout. So that is why we have also balancing markets to really, have not those fluctuations. And they're like, in Germany, at least 3 different markets, which is like the FCR, AFRR, and MFRR. The FCR being the quickest, where you really have to ramp up or ramp down your devices within like 30 seconds of time. The AFRR, which is like the automated frequency restoration reserve, you need to have your machines running up or down within 5 minutes, and MFRR within 50 minutes. And the good thing is you get paid for that. So basically, if you have like the FCR market, you get a capacity payment. And within the AFRR and MFR, you get a capacity payment. Just basically when you say, I offer those 1 megawatts of energy, they pay you. And then if you get actually activated, so that you have to turn it down, you get an additional like activation payment. So this is pretty nice to have. And that is also what we are doing in Finland, actually. We participate in the MFRR market, but we have to say we only have like very few activations every quarter, like 1 or 2 maybe. So like the Finnish grid is in this field like pretty stable, like in those MFRR markets. And this is basically how you pre-qualify for this. So because the grid operator wants to know whether your machines are capable on like powering up and down. You can see here they want to have it like run on standby for 10 minutes, and then you need to activate your machines within like 5 minutes, ramp them up to 100%, and then keep them running. And after this time, you have to shut them down again within also these 5 minutes. So that's how they can ensure that your machines are technically capable of doing so. And that's also what I actually did. A little bit of a nice story behind this picture, because everybody says, yeah, Bitcoin mining can power up, can power down in this time. Me, for myself, I'm always curious if it actually is the case like so. And that is what I basically did here. And a little story about it. 2 years ago, during the BTC Prague, my former boss, Dirk Röder from the Deutsche Telekom, I think you even announced him, He said that Deutsche Telekom will join Bitcoin mining and will do Bitcoin mining by themselves. And I was working at like an innovation team at the Deutsche Telekom back then. So me sitting in at the conference and knowing exactly what we're planning to do. And basically, I was the one who were kind of executing all of this, trying to gather some data from the Bitcoin miners and really see how they operate. And that is like one of the results I've gotten. Here I wanted to see if it really is capable of doing or in participating the balancing markets. As you can see here, just a little bit technical, but I'm trying to explain it as good as possible. You see here the red line, those are also the set power targets where the Bitcoin miner should come to. And then you have the green boxes and the yellow boxes. Those are like the tolerance areas where you have like a tolerance of plus, minus 5 or 10%. This is like good. And basically the green line are all the values from the Bitcoin miner. So what exactly is this? You just basically want your green line to be within the green areas. And that's what I also did here. And as you can see, it works really beautiful. Yeah, and it is capable of participating in the balancing markets. That's the result in short. But really interesting to see, it needs around like 90 seconds to really reach the target of the red line here. So it's not capable, or at least for this miner, it was not capable of participating in the FCR markets, like the fastest ones. But for the AFRR and MFRR markets, it's really capable of doing so. All right, let's come to the revenue of it. Basically, you get paid by the aggregators or TSOs for the balancing part. And this could be quite a lot per megawatt. You see here for the capacity payment, it is around like 80,000. It really depends how the market situation is and about like a few other factors, like what is your trading strategy behind that. So it's also a little bit tough to get to the numbers exactly, but those are like rough estimates. Get 80,000 and 100,000 additionally for the activation time. So in total, like 200,000 of additional revenue just for participating in the balancing markets. And then we have another problem, which is like the curtailment. Right now in Germany, you have way too much generation and not the capacity of the grid to lead it through all of Germany. So basically what the German regulators are thinking is they want to have like the shift or the load to the consumers. They want, or the law they introduced, it's called like the section 13K of the renewable energy law. And it basically says they want to make utilize the energy instead of curtailing it. So what they are now doing is they say, okay, during those curtailment times, we give you a price of 40 euros and 40 cents per megawatt hour, which you as a consumer get. Basically, you need to qualify your operation for it, but you get a really, really good energy price for it. And yeah, normally you pay in Germany like 20 cents per kilowatt hour, which is like way, way higher, or even like 30 cents. And getting it for 4 cents is a pretty nice incentive. However, there's a catch. Right now, this law only favors like electrolyzers, large heat pumps, and also hybrid heat plants. And the stateless compute, like such as Bitcoin mining, is not yet recognized category, meaning Bitcoin miners currently cannot really qualify for getting this price. So this is really bad. And also this is why we have the assigned volumes that are like substantially below the available curtailment. So it's not really been used. I have not yet. It's still like a pilot project, this whole law. It's basically running since 2024 of October. And they want to have it running for 2 years. But right now they're still like experimenting with the numbers and also like the processes of qualifying the additional like consumers. There is like some ways to get it. Maybe if you like use wasted heat, for example, You need to use like at least 95% of the waste heat, but still like the regulators are saying, we don't really want this to happen, and it's not really an open market yet. All right, but if it's possible somehow for Bitcoin miners to partake in this, you can have like a really, really good energy price. I mean, paying 4 cents per kilowatt hour is a pretty nice saving here. And just think, if you have like a super good power price of, let's say here, 10 cents per kilowatt hour, which is like 100 euros per megawatt hour. If you really try to subtract it, you have like an additional savings of 30,000 per year. But this also comes down to the hours of how often you get curtailed and how often you get actually this price of 40 euros per megawatt hour. And also if your price, like your spot price or day ahead price changes and is way higher, you have a higher saving, of course. All right, coming now to the last layer, which is the waste heat recovery. And here you can see 2 pictures actually from our sites in Finland. And we have 2.5 megawatts of mining power running here. And this runs solely on 100% sustainable energy. And the nice thing about it is these are all hydro miners. And basically, they are using the excess heat to basically deliver it to industrial areas, but also to Finnish households. And therefore, we are working together with like a heat operator in Finland and basically selling them the excess heat. And you just said, why aren't we using like the other balancing markets, for example? So we have a contract here in Finland with them. And basically what this means is we have an SLA running. So we need like a really high uptime because we have to deliver the heat. If we just power it down every day or every hour for a couple of times, we cannot really deliver this heat, meaning we don't, or we have a breach of contract. That's why we have to pay them. So that's not really, or that's the case where we cannot like partake in the other markets yet. And there are also some like technical differences between Bitcoin mining, but also like AI data centers. For example, in our site in Finland, we can deliver heat with up to 80 degrees of Celsius, meaning we get paid at around 2 cents. I don't know exactly how it is in Finland, but in Germany it would be around 2 to 5 cents per kilowatt hour that they pay us. With liquid cooling AI, you get a maximum of like 60 degrees and also get paid less because you deliver less heat. Also, there's like a new law in Germany where it says that data centers have to have recovery heat. Basically, they have to deliver it to somebody else to be more sustainable. And that is why AI can also meet this regulation. They can sell the heat, but they cannot match the economics which Bitcoin has. Like the 80 degrees, they cannot reach it. And if we look at the numbers here, we see that Bitcoin miners can have up to like 350,000 euros of additional revenue just for the heat sales. So this is also pretty nice. And also comes down to, of course, the negotiated price with the heat operation, but also like the temperature and also the availability of the heat. And now we just combine all those layers, and you can see here that from 800 to 900,000, we have an additional revenue, which comes in sum to 1.2 up to 1.5 million. So I know it's pretty hard to have all those 4 layers running, but having like 1 or 2 additional layers on top of the mining revenue is really, really helpful for every miner because we know every cent counts here in this business. So yeah, and also a really nice diversification for your portfolio. You see here in Bitcoin mining, you're really dependent. You don't have any influence on like the network difficulty, on the Bitcoin price, but each layer has independent drivers which make your risk profile less and less risky. So let's talk clear here. When does only Bitcoin mining make sense, where maybe the stack of all those revenue layers loses? Obviously, when you have super low electricity prices, we're talking about below 4 cents here, then just mine. Honestly, it makes just sense to mine the fastest you can, set up your site, and yeah, be ready, because I think 4 cents is like you can have an operation running for the next couple of years easily. Yeah, but also, when does AI make sense? For example, when you have a hyperscaler tenant agreement where they want to rent your place, they pay you loads of money if you have a really good mining or a really good location. They pay you millions of euros every year just for them to use your site. Also, if you have lots of capital available, talking about 30 to 50 million a year per megawatt, then just do AI, because it's super profitable right now and the markets are crazy. Yeah, and also, of course, if the risk profile of an investor favors the contracted SLAs revenue over the portfolio diversification which you have with Bitcoin mining. All right, so here are 3 things I want you guys to take home. Right now, Germany has effectively no industrial scale Bitcoin mining. So we just talk about little, small hobby projects, maybe a couple of companies who are introducing Bitcoin mining, but really there are not really big mining sites here. This is why there's high energy prices, which keep mining unprofitable today. If you have really good energy prices, we're talking Germany probably at around 10 cents per kilowatt hour, which is still for mining not good enough. But we can see in Germany, they really try to build the regulatory framework and to make the markets more flexible. And we just have to wait for them to follow and really to adapt to Bitcoin mining and to be a little bit more open about it. So that's what I'll be thinking is that going to happen in the next couple of years. Hopefully, we will see about it. We're actively working as TerraHash on it, and yeah, we just can hope for the best. But if Bitcoin mining enters the German energy markets, I think it will be highly beneficiary for it. So I want to close this presentation with one last quote. AI data centers add inflexible load to a grid that desperately needs flexibility. Bitcoin mining adds a flexible load to the same grid, and Europe cannot afford to ignore the difference. So thank you so much.